Yo, what's good everybody? Welcome back to another video. So in today's video, what we're going to be going over is supply and demand. Now again, supply and demand is going to be the foundation for our trading methodology, for our trading strategy. Most trades that we take are going to be based off of supply and demand. So we're going to be pretty much just marking up supply and demand on the charts, and we're going to be going over a lot of supply and demand examples. So let's just kind of cover the basics first before we start actually drawing it on the chart itself, right? So what I'm going to do is, let's just say that this is the chart. Let's just say this is the price action chart that you're looking at. Let's just say you see price doing something like this, right? So now I'm going to write down here on the screen demand, which we could do something like this, which equals, yeah, we could do this. And then I'll write one more thing out on the screen here. So now, when it comes down to supply and demand and us actually setting our levels, demand is going to be support. So whenever price is going down and it hits a level of demand, you can expect it to go in the opposite direction. And supply is going to be the roof, and it's the complete opposite. So supply is going to be resistance. So you can think about when price is going up and it hits a resistance level, that is a level of supply. When price is going down and it hits a level of support, that is a level of demand. Now, when trading supply and demand, why we want to only really take trades at supply and demand levels is simple. If I were to take a buy position, let's just say, so I'm going to use this tool, which I'm not sure if you guys are familiar with the tool. Maybe not, depending on where you are in the course. But this is going to be a rough draft of an actual trade. So let's just say I want to buy right here, and my target is resistance, and my stop loss is under supply. Notice the risk to reward ratio is a 0.68. So if I'm risking in this situation here $100 on this trade, right, I have an $100 risk for a potential $68 reward, which doesn't make sense at all. In trading, you want to risk $100 or whatever you're risking to make double that. So in this situation, $200, and this is going to be another way that we have an edge over the market, is by consistently making more money than what we actually lose. And by taking random trades and not taking trades in supply and demand levels, you're going to be really minimizing your edge against the market. You're going to be killing your risk to reward ratios. And one of the main reasons that we take levels at supply and demand are, one, because it's a high probability setup, and two, we have an area to set a stop loss and to take profit. So now let's just say we were looking to buy at this area down here, right at the supply and demand level. What we can do automatically is lower our stop loss to the under the level of demand, and we could target our supply level. And notice our risk to reward ratio is now a number 4, meaning that we're risking $100 on this trade to potentially make $400. And now we have a way better edge over the market, increasing our long-term profitability, which is more important than a short-term trade. If you see the market doing something like coming down and you expect it to come down to demand, don't just take a random sell in the middle, kind of floating here, right? Again, you always want to take a level or a trade at a supply and demand level. Why? Because again, it has an area for you to place your stop loss, and it protects your order. Because if I were to take a trade here and my stop loss is here, I know that if price starts to come under my demand level and hits my stop loss, then I'm wrong and I automatically want to close out of my position. And this is how we cut losers short, because price can do this all at once, all day. As long as it maintains above our level of demand here in this buy situation, right, the trade is still valid. It could be 4 days later and price still be trading above demand and the trade still be valid until you either see a big break to the upside where you'll make money, or you'll see a big break to the downside and you'll get stopped out of your position and lose money on that specific trade, right? So that's the basics of supply and demand. Now, what we're going to be going over is how to actually place them on your charts so you can identify these supply and demand levels. And the only way you're going to be doing that and getting better at it is by practicing. So what we're going to focus on is levels of liquidity where we have major liquidity. And what I mean by that is simple. When you see price come down to a level and have a big reaction, meaning that price moves away from that level very quickly, and the bigger the move is from that level, typically the stronger that level is going to be, right? So if price does something like this, it's a very strong level. If price does something like this, it's still a very strong level, because once it broke under, notice how it came right back up and then continued to go in the opposite direction right away, versus price doing something like this. Right? So it's pretty simple. The concept itself is simple. Now everyone's going to draw their supply and demand levels very differently. I try to be as accurate as possible. One thing that you could do is simply draw zones. So we could draw a zone like this, where notice how, again, it's supply and demand. So I'm going to draw my level like this. So notice how we have, I'm going to mark this off here. Notice how here we have demand, because again, price is going up, hit resistance, rejected, that's demand. Notice how we have supply, price broke above, came back down, resisted, and rejected, and continued to trade higher. But again, it comes back to the same example of the impulse. Price came right up, big reaction to the downside, broke above, came right back down, retested, big reaction to the to the upside here in this situation, right? And then again, we can continue. Notice how we have supply, or demand. Notice how we have demand here again. And notice how each time price came in the zone, it reacted right away and went in the opposite direction fairly quickly. Also, this is the weekly time frame. We want to draw our main levels of supply and demand based off the weekly and the daily time frame. So that's going to be the first level that I have marked off here for my supply and demand level, right? Now, what I'm going to do is, I see this area here being a potential area. I'm going to draw this out to be like this. Here's another supply and demand area, right? If we look at it, here we have demand, or here we have supply, here we have supply, here we have supply, and then here we have demand. As simple as that. So now what I'm doing is marking off areas where I could potentially take a trade, right? Notice how price came to the zone, immediate rejection. Same thing here. Notice how price came to the zone, immediate rejection. What I'm going to do is also lock this as well. So I'm going to modify this one a little bit to be like this, because again, I don't want to make my chart all, I don't want to say clogged up, but I don't want my chart to have too many random lines and levels, right? And now what I'm going to do is look for my more major levels on the daily time frame as well. But now what I'm going to do is kind of keep marking off my levels of supply and demand, my more major ones, which the first one I see is right here. I can mark this off here, which this one's a pretty big one. I'm going to mark that off there. Right, in this situation, notice how price came up, immediate rejection, came up, immediate rejection. And now price is kind of going up towards it. So what can we expect? We can expect price to go up and have an immediate rejection. Now, if price breaks above, we could wait for it to come back into it and then look to take the trade higher, right? So this is how we start looking for these high probability setups. And all I'm simply gonna do is keep marking off these major levels here. So here's another one, right? Here's another one right there. And that's it. These are the major supply and demand levels that I'm gonna have marked off on my chart so I could plan future trades. And all we're simply doing is trading in between these levels, right? So let's say if price were to break under here, my next target where I would look for price to go in the long term would be down here, right? if price were to break above like it did here, my next target in the long term would be way up here. Now, you know what, before we get into this example, let's go down to the daily time frame, because typically on the weekly I have my more major ones. Now on the daily I'm going to mark off my more minor levels, but we could see how things change a little bit, right? So they're still the same levels, they're still the same value levels, right? But notice how here price broke under and it looked like it was a clean break under, right? But notice how price closed up above there. If you go to the weekly time frame, you could see it maintained above the entire time. So you always want to confirm your weekly levels with the weekly close before you make any other decision, right? Now, what I like to do on the daily time frame is mainly use horizontal lines. So we're going to use a line like this one, right? So the first level that I see is right about here, 1830. I'm going to make this white. And what I'm going to do in this situation is I'm going to leave it as it is and I'm going to lock it. If you can make any adjustments you'd like to be as accurate as possible, right? In this situation, I'm going to put it here, right? Because if we look at it, which by the way, go into your settings, make sure the visibility, you can copy all of my settings, but the style, you want it to show price. Then we're going to go to text, text alignment bottom right, and then you can add daily if you'd like and add the price. That's a little bit unnecessary, but what I like to do is add 1830. I already know it's the daily just because I'm using a horizontal line, right? So I know when price coming, we're coming to the 1830 resistance, right? So this is the first one I'm going to do, because look at what happened every time price came to this, or the market came to this price. Rejection, rejection, rejection. We know that this is a level of demand, a level of supply, right? Now, staying on the daily time frame, right? Let's look at what price is doing and how we could potentially plan this trade. Notice how price broke above immediately, right? Now that we've broken this area, the best thing to do is wait to see if price will come back down into this area where we can look to take a buy to the next level, being here and being here, right? So whenever a level of supply or a level of demand breaks, you want to wait for price to retest that level, confirm that that level is broken and held and continued in the opposite direction. So let's say price were to come down to this zone and break under, meaning that we're starting to trade lower and candlesticks are closing lower. Wait for price to come into the zone and then wait for price to continue to move in the opposite direction, right? That's a nice trade opportunity there. That's a high probability setup. It's as simple as that. Especially when you have more major levels like this one, the probability of price retesting that level is very high, because you want to think about the supply and demand levels as like a tug of war, right? Or you could think about it as a battle, however you want to think about it, right? Just keep in mind that one time sellers held this level as a level of resistance. Look what happened every time price came to this level. Immediate rejection in the opposite direction. Now that buyers have broken under this level, you can think about it as sellers are always trying to bring price down, right? Again, when it comes to supply and demand, there are price levels that are more desirable. Right now, price may be a little bit expensive to buy because price went all the way down from 1759 to 1877. So buying is a little bit more expensive for the bigger players, right? So what's more desirable, for them to kind of buy in the middle of no man's land where there's no real level of support and resistance, or to wait for price to come back to 1830 to look to buy, right? Let's say price does come to 1830 to look to buy. Look how long it took buyers to break 1830, right? This candlestick, or the first rejection, happened July 15th. We're currently trading right now in November 17th. So it took them a few months to be able to break above 1830. If it took them that long, don't you think it would be best for you to wait to see what would happen at that level? And don't you think buyers would want to actually hold above 1830? Right? So these are all things that you have to think about when actually looking to take a trade. Right? The best setup for you in this situation here would be to wait for price to come to 1830 and look to take buys from there. Again, they fought so hard to break 1830, they're gonna want to hold 1830 no matter what. And let's kind of continue here. So again, we're looking at all current relevant price and marking off our levels based off of relevant price action. So another level that we can mark off would be, I want to say this level right here. I'm trying to do this with as much accuracy and precision as possible. So the best other area to mark off would be right here. And this is going to be 1794-ish. I'm going to try and make some adjustments because I saw this level because of right here and right here. So I'm going to make adjustments as best as possible. So I think putting it at 1795 would be what makes the most sense, right? Now, you don't have to ask yourself, oh, why 1795 instead of 1790? It's all at the end of the day personal preference and what your eye sees. Me, I see demand, supply, 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 demand, demand. I see a little bit of consolidation here, but then again, supply, supply. And then, I mean, it could be demand, but that wouldn't make too much sense overall, right? Or in more simple terms, support, resistance, resistance, support, resistance, resistance, support, resistance, resistance, right? So it's basically a level I see price rejecting a lot. And another level that stands out to me right away would be this one here, being 18. Let's put it down here at 1870 would be best. Right here. Again, I'm going to lock it out of my text. 1870. Why? Again, you always want to look left when setting up your levels. Structure will always leave clues for you, right? I could have done one right here, which it would also make sense, but what I see is this. So again, what we're doing is trading in between these levels of supply and in between these levels of demand, right? So let's just say that price is trading right here, right now. If it were to come under and break under this zone that I have here, then I'm going to look for price to come down to the next level, which would be right here, which I could mark off here as well. And I'm going to mark off here just so I can have it on my chart. Right, because again, there's levels on the daily and then there's levels on the weekly. This is why we're separating our charts and making it as clean as we possibly could while having as much detailed information as possible. So this is going to be 17, let's leave it at 1720. We're going to go to coordinates and modify the price to be 1720 flat and see what that looks like. It's a little bit too far, so I'm going to bring it up a few. Let's put 17. Let's just put 1722 right there. Right. So all I'm doing is trading in between these levels. Is literally all I'm doing. So if price were to break under 1720, I'm gonna look for price to come into my zone at 1685. Right. Now, if price were to start trading higher as it's doing, notice the break of 1795. If price were to break 1795, then I'd look for price to come all the way to 1830. If price were to break above 1830, then I'd look for it to come all the way to 1870. If price were to break 1870, then I'd look for it to come up to 1900, where we have another level of supply and demand in here. Now, if price were to break under 1830, I would simply look for it to come to 1795, right? But in this situation here, I'm going to wait for price to come down to 1830 and then wait for price to look to target 1875. So what I'm waiting for is something like this, for price to do this, right? And again, I'm looking to enter here. I'm going to place my stop loss somewhere down here under the level, and my target is going to be my next level. It's literally as simple as that, right? So that's really it for placing your supply and demand levels. I want you guys to go on your charts. I want you guys to practice placing your levels on the weekly. I want you guys practicing to place your levels on the daily time frame. In the next video, we're going to be going over our more minor time frames, which is going to be the 4-hour time frame, and it's also going to be the hourly time frame. So I'll talk to everybody in the next video.